So look, the goal is to make your money work harder than you can work for it. That's right. Make your money work harder than you can work for it, man. So look, today we're going to run through a few of my key tools to help you start investing in the stock market, man. Whatever level you're at, this is going to definitely help you out, man. But particularly for my beginners, this one's especially for you, man. So look, we're going to break down these tools. So the whole idea of the stock market is to grow our net worths over time by buying assets, particularly assets when they're on sale. That's the best time to buy stocks, when they're low. So we ride them up, and that's how we truly multiply our net worths. And I understand, man, everyone's got objections in this game. And most people, they count themselves out of this game because they believe it's too complicated. They believe that they've got a lack of money and a lack of understanding, man. And truthfully, that just ain't the case. So look, first thing we need to understand, and truly on the fundamental level, to get into the game, we need a brokerage account. Now, this is a little bit different from a typical bank account. The only real difference is that we buy stocks with these accounts. Now, brokerage accounts come in all shapes and sizes. Now, if you're a beginner, then of course there's great platforms out there to truly help you get in the game, man. And a couple of my favorites, which I don't mind using, which I've used myself early on in my investing game, were accounts like Free Trade. You know, you've got Trading 212. You've even got accounts like Webull, and they're great, man. They're easy, they're user friendly, they're super easy to get on and get in the game, man. And usually you don't need a minimum amount of money to open up the account. So those are a great place to start, man. But I will say, I don't want you to stay there. I want you to truly graduate, should we say, and level up to the more professional accounts, which have a bit more features embedded and a bit more longevity with them. So they're definitely accounts like, you know, you've got IG Trading, you've got Hargreaves Lansdown, you've got accounts like Fidelity. You know, these are a bit more established, should we say, you know, and that's where truly you'll have more features and a bit more professional. So once you start elevating your game and getting into the market, man. So the number two thing we need truly is a pad and a pen, and we need to write down some investing goals, man. You know, what do we want to hit in the short term, the medium term, and the long term? I get everyone wants to be, you know, make money, and most of us want to be, you know, millionaires and stuff, and that's great. That's definitely one of your goals, but let's be realistic in our approach starting out. And like I said, start with those short-term goals. What do you want to achieve in 6 months time, you know, in a year's time? What do you want to achieve in a 5-year period? You know, that's still technically short to mid-term. And then obviously with long-term goals, you know, what are your true whys? Why you want to get into the game? Is it for you? Do you want to just, you know, create some passive income so you can leave your job earlier? Do you want to invest so your family have a sustainable life later on in the future? Those are things we need to actually get the clarity on and write those things down on pen to pad. So that's number two, man. So number three is super important, and this is going to massively help you get into the game. And when you're starting out, this is something I did personally, and I implore you guys to do this as well. It's the idea of auto investing. So what do I mean by that? It's actually, you know, setting aside a portion of capital, and capital meaning money we just put aside to invest. So whether that's a portion out of your wage, you know, every week, every month, every few months, whatever that number is, that's personal to you, that's relevant to you, and the discipline to set that aside every week, every month, like we said. But the way we do it is automate it, simply just like any other bill we have. You know, we pay our mortgage, we pay our rent, you know, we pay our energy bills, all on automated. Before we even see the money, it's gone out the account. So investing needs to be the same way. You know, we need to pay ourselves first. I understand that we get our paychecks, and, you know, taxes comes out before we receive the paycheck, understandably, but investing should not be a second thought. It should also be taken as serious, you know, as paying your rent. You know, get into the habit of understanding it that way, like it's any other bill, and it's automated. So you haven't got to go into the account and send the money over, because you're not going like, man, we're gonna just, you know, we ain't gonna do that. We're not gonna be we're not going to be consistent with that, especially in the early days setting out, man. So that's truthfully one of the most important ones, one of my favorite ones that you need to keep in mind. So number 4 is again important. You might need your pen and your pad for this one again. Is your risk tolerance. Okay, so again, risk tolerance comes in all shapes and sizes, and I want to say first and foremost, there is no wrong risk tolerance out there. Let me explain. So when I first got into the game, my risk tolerance was not what it is today. Let's say that. And let's say if we take a scale of 1 to 10, 10 being, you're YOLO, you're crazy with it, you've got high risk, and 1 being like, you're shook, you're not really feeling it. I was around about a 6, so I was a little bit over halfway. So I had a very defensive mindset. I come from poverty. I come from council estate. Money was short. Money was not growing on trees, as they say. So my tolerance to it, to getting in the game, was lower. Was naturally lower, understandably, like everyone else starting off. But the point I'm trying to make is, no matter where you start, you can always increase your risk tolerance. And even if you don't increase it, that's not wrong either. This game is amazing and it can be played by anybody. So let me break it down further so you can understand. Let's take, okay, most of us growing up, myself, you watching now, you played football growing up or some kind of sport. So with football, we've got all different positions. And this is great with investing. The earlier you understand what position you are great at and you're great at playing at, that will help you get into your investing game. So for me, I was always a left back, but I was an attacking left back. So I'm naturally, like I said before, defensive mindset driven. But now and again, I fly up the wing and I'll cut in. You know what I'm saying? I'll lay up or I'm going to lick a shot top corner. That's where, that little bit of risk comes in. I can make a play. Some of us might be strikers straight out. We might be 9s and 10s and we're ready to just bag. We're ready to put our money in. We buy these stocks and we just get into the game. We're at it. We're hitting top bins. And that's cool. That's great. If you're like that, salute to you. But then also on the other end of that, some of us might just be, like I said, defenders or even goalkeepers, where our risk tolerance is like a 3 or a 4. And there ain't nothing wrong with that. That's what's beautiful about this game, because anyone can play the position they're in, man. So that's definitely a huge thing we need to really knuckle down on and understand what is our risk tolerance of being vulnerable with ourselves, being real with ourselves, and truthfully owning that, man, because there's no shame in it. So that's definitely an important one. And also number 5 one I want to get on is, we need to, after we do all of that, it's amazing and it's great and it's important that we get into the game, but how do we stay in the game? And the only way we stay in the game is by keep learning the game. Because I'll be honest, the first investment you make, the first trade you make, the first time you get into the market, it probably won't be the best decision or even the right decision. But the most important thing is that you've got in the game. And the way you get better at the game and sustain winning in the game is, the only way you do that is you keep learning, man. And you truly do that by exposing yourself, I like to say, with something simple and passive like ETFs. So if you're a beginner, you get into the game with something called ETFs. They're a great way to enable you exposure to the market, because you can buy a bunch of stocks for one price. That way you spread your risk and also you're still participating. So I like to call it you're earning while you're still learning, man. So those are my few ways of getting into the game. Hope you got some value from it. These are definitely going to help you at any level, but particularly if you're a beginner getting into the game, these are definitely going to help you structure and navigate this game, this beautiful game of playing the stock market, man. So look, it's your boy Ash Assets, man. Appreciate you. Stay tuned. There's going to be more content, man. And if you're feeling it, if you want to get further education, you want to be, part of a deeper community and start learning some more, head over to my Instagram, Ash Assets. Hit the link in the bio. You can join the Patreon, man. We meet up 3 times a week. We break down daily market moves. We break down great companies to add to your watch list. We give you tools to this investing game that you can truly use with your investing toolkit. I know if you use these 5 steps, particularly as a beginner, it's definitely going to catapult your investing journey going forward, man.